We appreciate everybody joining us here today to talk about my favorite topic, the HHS Provider Relief Fund program. And since our last discussion, there have been all kinds of changes, seemingly daily. And even leading up to this, a number of them yesterday, which we'll incorporate in this session. And so with that, just kind of give a quick overview here of what exactly we're going to be doing. We're going to cover some of the updates in kind of a presentation style event here at the beginning. And then we're going to go into a couple of different breakout sessions, because the last town hall type webinar that we did, what we realized was there were a lot of different people that had questions, and those questions definitely varied. So when we get to that point, we'll ask you to pick one of two, and you can, I believe, bounce back and forth between them as you deem necessary. But hopefully it provides a better opportunity to cover a few more things that are applicable to you, and then also actually ask some questions and have some interactive dialogue around this. Once again, I am Tyler Bernier. I'm a partner out of our Oklahoma City office. I generally work exclusively in the healthcare industry on audits and similar consulting work, but I feel like my second job these days is monitoring and providing information on the Provider Relief Fund so that we can keep you all updated as to what's progressing and more importantly, how you can utilize and keep these funds. And joining me on this portion of the session is Ashley. If you want to introduce yourself.
You just probably stay close to the same. My name's Ashley Brandt-Judah. I'm partner in our Fargo office, and similar to Tyler, work primarily on the assurance side with healthcare organizations. But yes, spending a lot of time these days working through Provider Relief Fund and the various considerations there.
And we also have Eric and Jeff that are going to join us when we get to the breakout sessions. So hopefully a decent amount of resources available for you here. So to kick it off, always need to disclaim, as I said, things rapidly change. I wouldn't be surprised if during the course of this session they release something. But as of today, here's what we know. And we did incorporate, as we go through things, the releases yesterday, specifically around capitalized equipment and some settlement items. So we're trying to stay as current as possible. As always, refer to some of the source documents on the HHS website, and we definitely can't provide any assurance over what funding can be used for on this program. We'll provide our opinions to the extent that we can, and hoping that will help you as you navigate through this, what seems to be very difficult process, or at least in my opinion, something much more difficult than it should have been. So just to kind of set the groundwork, most of you are probably aware of this, but again, kind of going back to the beginning, these funds were received in many different distribution streams, many of which weren't even requested. They kind of showed up randomly in April. There were other phases where you could apply for funding, or there are phases where you could or you did receive amounts specifically because of the type of entity you are or what you're doing. And when you receive those funds, for almost every one of them, excluding the ones noted here, there were specific terms and conditions that you were required to attest to. And you could do that attest function formally through the HHS website, or HHS basically said, if you don't return the funds in 90 days, we're basically going to assume that you have attested. So that attestation includes a lot of things, but a couple of the bigger ones are that you're certifying that you're only going to be used the funds to prevent, prepare for, and respond to coronavirus. That's important because in almost every aspect of this, you'll see those words pop up over and over regarding how you can use the funds for expenses, how you can use them for lost revenues, how you support them, how you report on them. So everything really ties back to this idea of preventing, preparing, and responding to coronavirus. You'll also, in the terms and conditions, certify that you're not going to use the payments for expenses or losses that have been reimbursed from other sources. And what you'll see as we walk through this, as we sit today, the view of HHS is these are intended to be the payment of last resort. So anybody who's ever heard of or been involved in FEMA, similar to that, they fully expected that you're going to use any means necessary to support your expenditures, to support your losses, etc. And HHS will be the backstop to help kind of bring you back up to zero. Whether that was the intent of the program or not, that is kind of the viewpoint as we've walked through this. And we're hoping that as we saw with yesterday's changes around capital equipment, that will slowly be pulled back, but kind of the position that we're in today. Now, if you've received funds and they are in excess of $10,000, and that doesn't mean that you feel like you can utilize more than $10,000. If you've received one or more payments exceeding that $10,000, then you're going to be required to submit a report to HHS. They are intending to have an electronic portal available online, they say by January 15th, with the first report for calendar year 2020 being due by February 15th, 2021. So you basically have 1 month to submit this information. They did provide an outline of what these reporting requirements will be. The first version was issued in September and has been subsequently amended a few times, with the most recent version on the HHS website dated November 2nd. So if you haven't yet, and we'll cover in one of the breakout sessions a little bit more of what is included in that report, but it's going to be demographic information, information around expenses that you're claiming for this fund, lost revenue, and actually just total revenue information, as well as some non-financial information, so quite a bit, and broken down and including both 2020 and 2019 information. It is worth noting that these do not apply to the nursing home infection control distribution, the RHC testing distribution, or if you registered for the uninsured program, basically being reimbursed from Medicare on those uninsured rates. So with that, we're going to jump into what are some of the changes that happened, and what were some of the clarifications, and what are we looking at right now, and how you can actually utilize the funds, starting with the expenses. So Ashley, if you want to kick off this section.
Absolutely. As we were walking through the terms and conditions, as Tyler mentioned, there was this concept of the expenses and the lost revenue. And so I think initially when looking at that, the expenses seemed like the more straightforward piece, and lost revenue really was where everyone had the questions of how do we calculate this lost revenue number? And honestly, over time, it seems like the expenses have actually evolved into being, I would say, a much more difficult piece. I'm just going to there we go, get our slides back. And so we'll just walk through here some of the various considerations that are within the reporting guidance and within the frequently asked questions on expenses. And so I will warn you, it's a bit of a roller coaster, so just try to bear with me, and we'll walk through the guidance as it stands today and what we know. And so first off, within the notice of reporting requirements, it just basically says that you need to report on your use of the provider relief fund payments by submitting expenses attributable to coronavirus that another source has not reimbursed and is not obligated to reimburse. So again, that same language pulling back from the terms and conditions. Within here too, they also noted that these expenses may include general and administrative or healthcare related operating expenses. And so that's actually something that if you received greater than $500,000, you'll have to even break that into additional categories. But these will be the categories that you will be reporting those expenses on as well. And then they do note, and this was something initially, it seemed like this would be a positive, that expenses attributable to coronavirus may be incurred in both direct patient care and overhead activities related to the treatment of confirmed or suspected cases of coronavirus, preparing for possible or actual coronavirus cases, maintaining healthcare delivery capacity, which includes operating and maintaining facilities, et cetera. And so that's the direct verbiage right from the reporting guidelines. And really when reading this, initially, again, it seemed like, wow, they're really opening this up, that these funds can be used for a number of different sources or for different reasons. And so within the categories, so their first was this, as I mentioned, the general and administrative expenses that are attributable to coronavirus. And so the various categories that they note there, mortgage and rent, insurance, personnel expense, fringe benefits, including hazard pay is noted in here. I know that's a big question that's always out there. Lease payments, utilities and operations, and then even just this broad category of any other general and administrative expenses that are attributable to coronavirus. Then on the healthcare related expense side, again, lists out a number of areas: supplies, equipment, information technology facilities, and then again, the broad opening up of really any other healthcare related expenses that are truly attributable to coronavirus. And so again, as Tyler mentioned, there's been a lot of discussion on the equipment and what exactly does that mean and how is that recorded, and also on some of the facility capital expenses. And so we'll take a look here at the latest guidance that just came out, actually just yesterday. And so you may have seen on October 28th, there was a frequently asked question that was issued that definitely caused a lot of turmoil with providers, essentially noting that rather than claiming any of the costs that you paid for capital purchases, that you could only claim the applicable depreciation, which of course, like I said, caused a lot of heartburn out there, because there's a lot of providers that were wanting to use the funds for capital projects, making various improvements. And so that really seemed to limit that. Just yesterday, so this is some good news, there were a couple of frequently asked questions that were issued that did seem to turn this around a bit. And so really what was asked here, the first one was specific to capital equipment, and essentially just asking if the providers can fully expense capital equipment purchases, or if it is only the depreciation that can be included. And HHS did note that expenses for capital equipment and inventory was included here as well, may be fully expended only in cases where the purchase was directly related to prevent, prepare for, and respond to coronavirus. But definitely opening it up that if you do have those items, you can see some of the examples that they've listed here, only examples, not meant to be all inclusive. But if you do have those true equipment or inventory purchases that truly were directly related to preventing, preparing, and responding for the coronavirus, is that you could essentially claim that full amount that you paid and not just the depreciation. So that's really a good change from where they were at. Next question that was out there, again, just released yesterday, relates specifically to the capital project side. And so same concept, because there was a lot of concern out there, can we only claim the depreciation? And so they did clarify that the expenses for the capital facilities, again, can be fully included as long as they were directly related to preventing, preparing for, and responding to the coronavirus. And so you can see a number of examples here. They talk about upgrading HVAC system, and again, have both discussion of the temporary and permanent facilities. So I think this is definitely good news, because I know there are a lot out there that not only had questions on this, but had either projects planned or projects that they had started already. Okay, so now that we've covered the good news, we'll get into this concept of the reimbursed by other sources, because this is definitely, I think, at least in my mind, the piece that theoretically makes sense, but I'm still struggling a bit with how providers will actually implement this in practice. So we'll just walk through some of the steps and the guidance that's out there to date. And so, as Tyler noted, in the original terms and conditions, there was this discussion that you cannot be reimbursed for expenses that are reimbursed by other sources. And so certainly makes sense. I think we all just assumed, okay, that's makes sense. If I have a grant or something that's paying for an expense, I clearly can't claim that twice. But where it gets a bit complicated is that HHS has brought in this concept of the fact that they will only reimburse the marginal increased expenses related to coronavirus. And so essentially, where is it that we're seeing this, or what do they mean by that? And so there's actually a frequently asked question that they just released on October 28th. And this, Tyler already alluded to this at the beginning in his discussion of the FEMA funds. But essentially they address this concept of, okay, typically FEMA is intended to be the last source of reimbursement, but now we're hearing that PRF is. So, what order should these funds really be applied? And so within this frequently asked question, they do identify some of the other various sources that they're referring to here. So you'll see not only discussion of FEMA Paycheck Protection Program, but also discussion of even your direct patient billings through insurance, Medicare, Medicaid. But they are saying here, as you can see, the very last bolded sentence that I have is that PRF payments may be applied to the remaining expenses or costs after netting the other funds received or anticipated to offset those expenses. So really the intent here is that you are utilizing anything else that you have, whether it be just your true patient operating revenue or whether it be FEMA funds or funds from another source before you would tap into the provider relief funds. Okay, so that makes sense on the surface, but I think once we start getting into this concept, and specifically when you're looking at including the patient revenue as well, you get to the concept of, well, how does this actually work in practice? And so this is an example right out there that HHS has out in the frequently asked questions, but we'll just walk through here the type of concept that they're looking at. And so you can see here, this is just using an office visit example. They're saying here that the pre-pandemic average expense of an office visit was $80. So that would have been in 2019, average cost of a visit to provide a visit was $80. And now post-pandemic, your average cost to provide a visit has been determined as $85. So overall, it's costing you an average of an additional $5 to provide services in 2020. And so they walk through a number of examples here. We'll just talk through them. So the first one is in this case where we're talking about the $80 pre-pandemic visit and the $85 post-pandemic visit. If you have Medicaid reimbursement of $70. So in this case, you can still only claim $5, even though you're essentially not being reimbursed for the full $85 cost. That additional $10 is not considered to be attributable to coronavirus, because that's just normally a $10 that even prior to the pandemic, you just would not have received that $10. So example 2 here you can see is a Medicare reimbursement where you receive $80. So in this case, it's the 85 minus the 80 again, and you would still get to claim that $5 as an additional expense. So the next one, commercial insurance reimbursement of $85. And so this one I thought was really interesting, but it definitely does make sense, is that even though you did receive the full $85, is that you can still report the $5 additional reimbursement, because really the commercial insurer is not reimbursing for that additional $5 related to the pandemic. This one again was interesting in my mind because it makes sense, but at the same time, knowing that they're wanting to use other sources of funding first, I thought it was interesting that they are allowing providers to have a bit of a, I guess, profit margin on some of these visits, if you will. So example 4 was if you have a commercial insurance reimbursement of $85 plus a $5 supplemental. And so in this case, you're actually getting a true $5 supplemental. And so nothing there that you can claim. And then the last one is if you are actually receiving reimbursement from the claims reimbursement for under HRSA. And so there, if you're receiving $80, you can still report the $5 because again, you have an increased $5 cost that's above and beyond what you're being reimbursed for. Okay, I know that was a lot. So we just have one more example that we will run through. And this one's really looking at those other type of healthcare expenses. And so when looking at these, what they essentially want providers to do is to first calculate your change in your healthcare costs between calendar year 2019 and 2020. So determine the change there and then identify the portion that's attributable to coronavirus. So makes sense logically, but again, in my mind, a little bit easier said than done. Next, after you've done that and determined that portion that's attributable to coronavirus, you then need to apply reasonable assumptions to determine the amount of the total revenue and other assistance received that you have. So whether, again, that's your patient revenue, PPP loans, anything else that apply to each type of healthcare expense. So we'll just walk through an example here from the frequently asked questions. So first one here, just talking about PPP. So let's say you had PPP supplies in 2019, you paid $1,000. In 2020, cost of your PPP went up to $4,000. So your initial change, your expenses in year over year, is the $3,000 difference. And so of the $3,000, you then need to look and say, how much of this increase was truly attributable to coronavirus? Because of course you might have had some increases in PPE just because of, I just saw it pop up that yes, that this should say PPE, excuse me. I saw the little comment pop up and I'm like, yes, that is true. So PPE, excuse me. But essentially, so you have to determine of that 3,000, how much of that is truly attributable to coronavirus versus just normal inflationary changes, that type of thing. And so in this case, it was determined that the $2,500 was determined to be attributable to coronavirus. And then once you've determined, okay, so we have this $2,500 that's attributable to coronavirus, then how much of it was determined to be reimbursed by other sources. So in this case, in the example, we said there's $1,000 that we've determined is really reimbursed by other sources. So that then leaves you with $1,500 of unreimbursed healthcare related expenses that you can claim under the Provider Relief Fund. So again, I think at least me, when I first, was looking at this, I thought, oh, I want to say PPP again, goodness, PPE supplies, that type of thing, those are the very straightforward, assuming that you could just claim those right under the Provider Relief Fund. But obviously, again, much more complicated than that, under this current guidance. Okay, so now that we've talked about the reimbursed by other sources, again, big question that's out there that was clarified on October 28th was how does this work for entities that are cost reimbursed? So you're a critical access hospital, for example, is who it has a very significant impact on. And so HHS did clarify this, unfortunately not in the fashion that they were hoping that we would clarify it in. But they did say that if you are a provider that really receives cost-based reimbursement, and if your full cost was reimbursed for those expenses, then you have nothing to claim under the Provider Relief Fund. And if you did have a partial reimbursement, you can then claim those additional costs that are above and beyond what was reimbursed. So again, theoretically makes sense, but I think certainly something that when providers are looking at this and determining how to do those calculations certainly complicates things and just provides another layer of difficulty. Okay, so I'm sure everyone's very happy that I'm done talking about expenses. And so I'm going to turn it over to Tyler to talk a bit on the lost revenue side.
Yeah, and even before I jump in, something that's important to understand, because probably half the people on this call are going, okay, I kind of get this, and half the people are going, that makes no sense. Like, I run a hospital, or I run multiple nursing homes, or I run a system of facilities. I'm not going to be able to look at things at this level. And honestly, we agree. So what we're trying to show is here's how HHS is looking at things. And I think we have to take that into consideration as we are understanding, okay, then how do you support information?
Right.
So on the lost revenue side, as I kind of pointed out at the onset, there were two things that could be used to support use of funds. And it was either these direct expenses, which Ashley just covered, or it's this concept of lost revenue, which I think all of us are, or at least I am probably sick of saying and hearing lost revenues. If at some point we can get past that, I might be a happier person. So this concept has changed over time. It's morphed from when we first had the terms and conditions to in June when HHS provided a little bit of guidance on what we thought that might look like, to September when they provided an extreme change to more of a lost margin concept, to kind of where we are today. So where we stand today, as of November 2nd, a modification from HHS because of a significant amount of external pressure, and I can say that because they said that, they have separated the concept of expenses from the concept of lost revenues. Before, they were kind of tied together. It was like identify your expenses in step one, identify your revenues in step two, but then reduce the expenses that you had in step one. So you really had this limit. Now, as of November 2nd, we have these two separate areas where you can identify amounts to claim. It is important, HHS does say that you're supposed to look at expenses first, so you're not supposed to just skip right to the step two. That's what's out there, so take that for what you will. So how do you calculate lost revenue? As we stand now, lost revenue is defined as the change in patient care revenue between 2019 and 2020. And that does not mean your fiscal year end. It is calendar year for everybody. That creates its own conflict because for fiscal year entities, there might be cutoff type issues or other matters that come into play. There is definitely accounting issues as you look at a June year end or a September year end, for example, because you haven't completed the 2020 year. So you don't know what the full measurement is yet. If we actually get all the way through 2020 and you haven't fully utilized the funds, then you do have until 2021 in June to also try to use it for expenses or lost revenues. And the lost revenue calculation in that scenario is January through June of 21 compared back to 19. So it isn't 21 to 20, it's 21 to 19. An important factor in this is there was an FAQ released in October that says other assistance received is, in the eyes of HHS, considered operating revenue, and it needs to be included in the calculation of this lost revenue assessment. Basically, other assistance needs to be in your 2020 patient care revenue. Other assistance received has been defined by HHS in a number of its releases to include things like the PPP loan program, other state, local, and similar grants. So any funding that you received basically to help support this pandemic time period are going to need to be added into 2020 patient care revenue. Now, I continually, I would like to say on an hourly basis, but at least daily, get the question of, well, what if I just don't apply for forgiveness for PPP until the next year? Does that allow me to take it then? There's clearly room for interpretation within the guidance because all it says is other assistance received, and it's exactly as it's written on here. So how you interpret that, I guess, is up to you. I would say, in viewing what HHS truly intends and from all of their positions to date, and the idea that they are anticipating being this last payer of last resort, as well as the fact that the expenses incurred were during the 2020 period, it seems difficult to really try to push it into the next period just because that's when the forgiveness was received. But I do want to point out that it has not been fully clarified within the guidance. So that is, again, subject to interpretation. If you'd ask my opinion, again, it's hard to say that you can kind of back that out or ignore it just because forgiveness hasn't yet been received. The other thing to point out here, yesterday they did provide the first modification to this calculation since it's been received. And that basically said, if you have settlements that occur during these years, but they really relate to services provided prior. So let's say you submit cost reports and you had a cost report settlement on your 2018 fiscal year, and it has a financial impact. So it's different than you expected, for example, or you're on cash basis, and so you don't record those until they actually occur. You would exclude the impact of any settlements relating to periods before 2019 from this calculation. So that both creates a little bit more work in coming up with the calculation, but in my mind, it's kind of that first step to allowing modifications. And so it makes me a little bit more optimistic that maybe we start down the path of getting this lost revenue calculation back on its feet and in the right direction. So as I mentioned, the other assistance received, just to point out what some of those relate to, again, the PPP, the CARES Act, business insurance, et cetera. We kind of chuckle when we first saw that FEMA was in here because FEMA's always been considered a payer of last resort. You have to use all other means first. And so HHS is putting themselves behind FEMA. And so they're kind of in an argument of who comes first. And there's even a frequently asked question out there on, what should come first. And it provides almost no true guidance. I point this out because I think it gives everybody here what HHS's mindset is and why I can say they view themselves in that way, because of this consideration of their funding program compared to what FEMA would do. And then again, I mentioned this release on the third-party settlements and how that should be excluded when we're dealing with periods before 2019. So some additional reporting requirements. As I mentioned on the onset, there's going to be this reporting that's required for calendar year 2020. The portal opens hopefully on January 15th, and it will be due by February 15th. A lot of the information, even though you have to look at your measurements on a calendar year basis, is going to be required to be tracked and reported on a quarterly basis. So take a look at some of those requirements, and if you haven't yet, I would start tracking this information. It's probably the most important to start here so that you understand, the revenue information that you need to pull, the expense information, the payroll information, the patient statistic information, et cetera. And I think, the one piece of advice that I've been providing or that I feel like I can actually give is, at least if you start tracking that information, as HHS gives us these changes on an ongoing basis and sometimes complete curveballs, it's a much better position to be able to react. You already have the information there in front of you to be able to hopefully, at least more quickly, adjust your assessments and figure out where you're at based on whatever else is being released at that point in time. I know there's a bunch of questions on things like, well, how quickly or how correctly does this information need to be if I'm an off fiscal year end, because it's not going to be audited, or what basis of accounting do I need to use, or how do I make adjustments for things that I know have significantly changed? So to answer those pretty quickly here, my own questions to myself, that oversight is really on what information you use is going to be coming back on the back end from any potential audit. And I would look more from audits on behalf of HHS, from inspector generals, et cetera. So to the extent that information can be as accurate as possible, probably reduces the risk that you have any potential paybacks. The question about how do I adjust for things that I know changed from year to year? Unfortunately right now, that's one of the biggest complaints on the lost revenue assessment. And even on some of the expense analyses, as you're looking at some calculations like Ashley went through on cost per visit, for example, on PPE changes, those types of things. There is not a mechanism in place to be able to adjust for that. So let's say you're a hospital and you went out and hired a number of physicians or opened up a new location or some new practices, or you're a physician practice and you brought on some new partners, or maybe you lost due to retirement a number of physicians or a number of dentists within your practice. You can't adjust for that right now. So it's clearly a big complaint that is out there. So hopefully a lot more changes that need to come our way in this realm. But I do think it's important to understand what's being required of you right now. And it really centers around this reporting that's going to be due again by February 15th. But again, portal not yet available. The outline of the information is available. So hammering this home a whole bunch of times, February 15th, if that changes, and hopefully it does, that we'll provide information as we need to. For that second report, if you go through the June 30, 2021 timeline because you haven't fully expended funds, then that updated report is going to be due by July 31st of 21. And again, that's regardless of your fiscal year end. And that's regardless of when you use the funds by. So let's say you fully utilize them through February of 21, you still have to do that 6-month report as we stand now. Finally, to kind of wrap up, some of this pre-prepared presentation before we get into the breakouts, and how's that for a PPP, Ashley? Pre-prepared presentation. President stumble.
Many acronyms and P's and things, and it's a lot.
So for those of you that are wondering about tax consequences, and we've received this from both taxable and tax exempt entities. So in the FAQs, tax exempt entities, it basically said this is not going to be considered taxable for those entities. For those that are taxable, however, there's an HHS FAQ and there's an IRS FAQ that are out there that says PRF payments don't qualify as qualified disaster relief payments, and they should be includable in gross income. So that creates a concern when it comes to what do you actually report for taxable income, especially if you don't feel like you've fully utilized or earned the funds through the end of this calendar year. To add complexity on top of it, HHS does not allow for a partial refund as we stand today. It's an all or nothing type situation. So if you reach out to them and say, hey, I got $200,000 and I'm only going to be able to use $100,000. Can I give you back, the $100,000 I don't think that I can use? They're not allowing for that. Again, it's all or nothing. So it creates a concern when you look at it and you say, well, I could only use $100,000, but I got to pay taxes on $200,000. So that is an area that as a firm we're looking at and addressing. And one of the breakouts we'll cover it a little bit more in depth. And if you have questions, we would definitely say reach out to your tax advisor. On a high level, I think the recommendation that hopefully is out there is there's some position to take that you have a liability at year end, and potentially even filing that position with your return. It seems much more difficult to pay the full tax in 2020 and then somehow claim a refund on any unused amounts in 2021. But again, we'll cover that a little bit more, and not being a tax person, I'll let Eric kind of cover that as we break out further. But it is still an area in development because the IRS made their first determination well before many of these rule changes took place. And I think at a point in time when this was really expected to be fully utilized by all providers across the spectrum. So with that, before we jump into this, Ashley, what did I miss, or what do we want to cover here before we move on?
I think you pretty much covered it. I think we got at least the the summary, and I think we can jump into the breakouts and run through a few more questions. We of course have the questions that everyone has submitted, and so have some answers to some of those, but then we'll have some time as well just for other questions that you have.
Are we just ask questions or on the chat?
Nope, go ahead, throw them out there.
All right, I have a question. So they divided up the expenses and the lost revenues. So let me give you a scenario. I've got 500,000 of expenses attributable to coronavirus, and I've got 1.5 million of lost revenue, but I got 2 million of PPP funds. So those PPP funds are considered operating revenue for lost revenue. So I've essentially covered all my lost revenues. Do I also have to attribute PPP money to the expenses, or can I look at expenses separate? Even though the PPP money fully covered the expense plus the lost revenue, do I get to look at expenses separate from the PPP?
Yeah, so they're separate. You knock the revenue piece out right away. So it's, you add it to 2020. If you lost 1.5 million in total and you got 2 million on PPP, then that effectively wipes out lost revenue. So when you're looking at expenses, the way that we exist now, the expenses are supposed to be net of any amounts received to reimburse for those expenses. And I kind of word it that way because that can include things like PPP. It could also include billing for patient services, other grants, etc. So it fully depends on the costs that you're claiming. So for example, if you are claiming $500,000 in costs that are, very much just, let's say it's a CT scanner or it is diagnostic equipment. I'm going to use that because it's an easier one, it's capital equipment. In that case, PPP doesn't cover any of that. You wouldn't have to reduce it by anything. If you put it into practice and you actually build out some, arguably HHS believes you're supposed to reduce it some by patient billing. How you go through that math exercise, I don't know. When it comes to salaries, if that's a component of what you're claiming as your identified expenses, then potentially that does need to be reduced by the PPP received. So it kind of depends on what bucket those funds are fitting in. And then based on that bucket, what are you getting paid for to support that expenditure? And in some cases, it's a very easy and simple calculation. In some, outside of a sole practitioner, dentist or physician that can, clearly delineate things for those that are working across multiple departments, it becomes very difficult and in kind of I don't know how else to explain it other than, multiple mini cost reports the way they've designed it. So it's a nightmare. But to answer your question, in short, yes and no. So it could, but it doesn't need to be because you got 2 million and you basically had 500,000 more than your lost revenues. That doesn't mean you wipe out all of your expenses. Does that make sense?
Okay, so right. So if the wages are unrelated to the delivery of care, and let's say it's on the admin side, for whatever reason, then that would be unrelated to the revenue side. But if it's people that are delivering direct care, that might be a different situation.
Correct.
Got it.
All right, who has the next question?
This is Kimberly. My question is regarding the FEMA information that you guys shared and kind of what you were alluding to with the last resort. We've deliberately held on any FEMA request with the thought process that we were going to need the expenditures to actually justify the CARES fund. And so when you were speaking, what brought to my mind is, are we actually obligated to go for FEMA as the first choice, or you get where I'm going with that?
I absolutely do. And yeah, as I kind of said, that's the frustration. I mean, it makes no sense. And there was even a question asked in the guidance. I'm going to pull it up as I'm talking here. The guidance that was released regarding FEMA made no sense because it's basically like they're fighting with each other to make sure that nobody gets any money. So it says FEMA is generally intended to be the last resort of reimbursement. However, HHS says that they need to be used before provider relief funds. What order should it be applied? And if you actually read the response, and it's about a paragraph, so we won't go through everything, but it provides no helpful information. So I guess my recommendation would be go for the one that you think you might actually be able to be reimbursed for, and just make sure you're tracking it so that you're not double dipping. So that if you do get paid by the provider relief fund, or you do get paid through FEMA, you're not going to go after the other one, for example, and they're both going to want you to make sure that you're not paid from another source. But it is, I mean, it's family infighting. It's the government basically saying they're saying neither one of us want to cover it, so good luck.
Yeah, thank you.
I know that doesn't help, but agree that that's the frustration.
Yeah, my fear is just the obligation to actually apply for one or the other, right? At one point, is CARE is going to come back and say, no, you were obligated to submit for FEMA because they're, and so that's my concern.
Yep. Who has the next question?
Yeah, what about the replacement of a CT scanner that's technologically obsolete? Would that be covered, or would it just be incremental, or?
So with the latest release, which was yesterday, they clearly, luckily, opened up the capital expenditure door. They had previously stated that it was limited to the amount of depreciation based on your basis of accounting, which was ridiculous to me because a tax or cash basis accountant could claim most capital items, but if you're on accrual, you couldn't. So that seems very unfair. So they opened it back up and said, all right, we're going to allow you to use these funds on capital purchases. It all goes back to that, the first thing I started off with and why I pointed it out. Everything has to be attributable to coronavirus. So what was the intent, or at least what's your documented position on why you made that expenditure and how is it attributable to coronavirus? If you replaced a piece of equipment because it was obsolete and you needed a new piece of equipment, that doesn't seem that tied to it. And in that case, you're probably limited to depreciation. If you are going to be utilizing it for care of COVID patients in one way or another, and I've heard many arguments on how CT scanners can be, and HHS clearly listened because their update to the FAQ actually does include CT scanners as one of the allowable expenditures, then you can. So I do think that there's an ability to utilize the funds for a lot more capital items today than we could 2 days ago, but it all ties back to how are you tying it to being attributable to preparing for, responding, or whatever the other one is. We're preparing, responding, and there's another one. But that has to be the key. And it's that documentation. It's really, if you can on the front end, especially depending on the dollar amount. So right now, CT scanner isn't cheap. I would probably have some documentation now so that if I'm questioned later, I can point back to this and say, here was my position. And then even having that FAQ, here's the FAQ that says, if it's attributable, then it's allowable.
Okay, thank you very much.
Yes. And for those of you that, I know there's a number of people on, and some of them, I don't know if they can speak. There's a lot of texts and chat questions. I know, just like last time, we'll get a listing of all of those, anything that's in the chat. We also have the questions that were raised ahead of time. So if you can't, I'll try to respond to afterwards, just so that everybody gets questions answered. It's just hard to kind of read through the chat and respond. It looks like Nicole, you got the next question.
So the end of your last question answer is a great segue into mine. We're a behavioral health facility. We also operate a hospital, but we've not been directly treating any COVID-19 cases, right? But we have been monitoring, we have been testing, we have, in a way, treating more the behavioral health aspect of the person than the coronavirus. Of course, if they get really bad, we take them to the hospital. But how would you then help us justify either the mortgage, rent, the insurance, lease payments, operations, utilities, et cetera, for the G&A portion of the expenses? Because we housed employees who were responsible for testing, temperature taking, screenings, et cetera. We had a temperature tent set up for all of our staff. So can you speak a little bit more about how we may be able to incorporate some of those naturally occurring expenses for our behavioral health facility into these expenses that we can claim against our provider relief funds?
Yep, I can. And so maybe to start, and you're probably already aware of this, but it's worth pointing out anyway, that HHS has come out and documented that they basically view anybody as a potential case of COVID, not just those actually treating it. And you can clearly see that because they did open it up to behavioral health organizations, dentists. I mean, dentists clearly aren't treating COVID patients, right?
Right.
So the intent was to keep the healthcare delivery system intact, which is why it's so frustrating that we're at this point now and having these discussions, because it makes it much more difficult. So in your scenario, I think you have a couple of things to look at. And the first is probably a little bit easier, but what can you specifically identify as direct expenses to respond to, prepare for coronavirus? So what are the, what are you doing around, hiring staff for tracking and monitoring or temperature checking, or what software do you have in place? Kind of those costs. Those are a lot of the easier ones.
Right.
Then you get into the G&A, and that becomes a lot more difficult across the board. So the way that the HHS is viewing it now, it's not going to be an easy scenario. It's not like you can take 5% of your overhead costs, because that's about what you're using for, allowing people to use space to do testing, like you said. So instead, it goes back to that example that Ashley was showing, where it's looking at average cost per clinic visit. So has your cost structure changed, that G&A structure changed, where maybe before you were at, a baseline of $1 million, and now you're at 1.1 million, and you can look at that difference. And then you would have to still look at, okay, are people paying me to utilize this space? Are you charging a rent amount? Are you charging, something to provide that service, to be able to access that overhead cost? And I saw you shake your head on that case. If costs aren't changing and they're really the same, then it's going to be hard to carve out a piece and claim it, unless what you can show is your volumes have so substantially declined that, really you have a piece of your facility. And this is kind of more where the lost revenue assessment comes in than the expense side, unless at some point, which we're hoping, they don't use this calendar year approach. So that's where the calendar year approach comes in and limits a lot of people, is that without the specific identification, you really have to lump all those expenditures together and do, again, almost a mini cost report. Here's our costs, here's our revenue sources in total, here's what is attributable to coronavirus and not reimbursed elsewhere. So it's harder to carve out. Again, there's nothing that is available right now to say 5% of our overhead costs really goes to this. Does that make sense?
Yeah, it does. And we're kind of in the same boat as the first gentleman who spoke, as we received the PPP funds. And so that blew our revenue right out of the water. And we're also providing more telemed services, which has a higher reimbursement rate. And
Yep.
so even if we remove the PPP funds, our telemed modifier has increased our revenue anyway. So the lost revenue really isn't an option for us. So we're doing our best to properly identify those expenses that are directly attributable either through the G&A or through direct services to coronavirus. So that's what stemmed the question, is we're doing our best.
Yep, I agree, and that's what I'd probably recommend for now. And hopefully, I mean, our when we first went through this, and it was the same on lost revenue side, our viewpoint, which clearly was much different than HHS, was you could look at a time period, for example, because I'm sure there were periods for anybody on this where you had a substantial impact to your operations, whether it's because you actually had to shut down, in a lot of cases for dentists and for physicians. For hospitals, you had to cancel elective procedures. For behavioral health, I know that the ones I work with, you had to basically not allow anybody in. So it was a lot more remote and telemedicine or parking lot type activities. So it clearly changes the volumes. But then things changed and provided more reimbursement, higher rates, et cetera. So that just kind of came back around and kicked you in the butt, which is unfortunate.
Thank you.
Who has the next question?
So based on the guidance, that makes everything specific to, preparing for, preventing, or responding to coronavirus,
You got it. Thank you.
It seems like if part of your lost revenue is because a physician left the practice for whatever reason, it seems like you'd have to carve that out because that's a loss in revenue that's not related to coronavirus. But on the flip side, if you're up in revenue because you added a new provider, even though you've also added expenses relating to adding that new provider, it seems like you're having to take the negative side, but you don't get the upside of the way that it is doing the calendar year comparison. Is that the same way that you're seeing the way the guidance is so far?
It is, and that's the frustration. And there's a good letter that was written by the American Hospital Association. And I know, many of you aren't with hospitals, some of you are, but I think all of the different advocacy groups are trying to push HHS, and they worded it very well to kind of explain, hey, a lot of healthcare facilities, and I use that term generically, have done a lot of things operationally to help provide services to the public. They invest in things like new equipment or physicians that create cost that you have to account for, you can't ignore. So right now, there, as I said in the first part, there isn't an ability to adjust, and that's unfortunate. I've had multiple examples of things. For example, you might have shut down a certain service line or a clinic or whatever it may be, and you have less revenue because you actually closed operations somewhere, and you're better off than somebody else who actually invested in new physicians and a new service line or opened a new clinic or a new location or whatever it may be. And you're penalized because you're actually investing to provide more services. So there is, as we sit today, there is no ability, but I think the number one pressure that I saw after the release in October was to get the capital equipment changed, and we saw that. The number two pressure is to get the lost revenue adjusted. And while we haven't gotten that yet, we did get the first little piece, which is them understanding, hey, there's activities that happen in our year that don't even relate to those years. So they've carved those out. Now it's getting them to understand you should be able to adjust these calculations to understand how we were truly impacted. You can't just take a static 1 year over 1 year. It doesn't work, but that's where we sit.
And then kind of similarly or related at least is the situation of a startup that doesn't have prior year comparatives. I know the phase 3 application included instructions on how to apply for funding, even if you were a startup that started late 19 or early 20. You have not seen anything yet though on how that would be reported in terms of what would be approved.
The phase 3 information that you pointed out was the only thing that I've seen released on those that started during the year. So until something else is released, it seems like you're kind of stuck in that expense identification bucket only. And hopefully, again, they'll release something different on that realm, especially if it's probably harder if you just started up, but maybe if you acquired a practice that was existing previously, you have some historical information. Right now, I don't even know if you can use that because it's that change in ownership. But yeah, the phase 3 application was the only thing that mentions it, which is crazy. I mean, I've sat in on HHS calls and CMS calls, and they're in a rush to get money out, and they're surprised that more people don't want money. They're not applying. When phase 3 was out, they weren't applying for it, and everyone else was standing back saying, we don't know how to use the money. We're not going to apply for something that we think we have to pay back. And then now they said you got to pay interest with it too, which is kind of like a kicker on top of it. So, and by the way, the interest thing, in case I scared anyone, what it says is if you took the money and you invested it in any interest-bearing accounts, and any of the interest earned on those funds would need to be included when you return the funds, or that interest needs to be used for the same purpose as the original funds. Who has the next question?
Tyler, I was going to follow up with the same revenue question. We had originally were using the tool to determine the lost revenue, and we were breaking it out by location or by department. I'm hearing now that it needs to be in a full aggregate. Is that correct? And full calendar?
Correct. As we stand to date, it is the reporting entity, which HHS defines, and it is everything for that year, and you can't do any breakouts, which I can't reiterate it more more times, but that's the area that we are truly hoping gets updated, because it makes no sense. Facilities that had to shut down elective procedures, but maybe continued on with other procedures, or had some service lines that did better. It seems strange to be able to kind of have to hurt yourself because of that, but it's where we sit today. So I'm hoping. Who has the next question? If he's listening, Derek, I'm waiting for your question from the deer stand.
You're not going to get it, buddy.
Tyler, it looks like we did have some questions about hazard pay. Someone just mentioned in the chat that they don't have a microphone, but they were hoping that you could address the hazard pay.
Sure. So hazard pay is a unique area because, in healthcare, clearly we have a fair amount that is in a hazardous condition. So my viewpoints have consistently changed on this one, but I still, in general, feel like, especially because HHS specifically identifies it, that hazard pay should be an allowable expenditure. And generally, you're not getting paid more from any payer for hazard pay, so you don't necessarily have that risk of having to reduce it by other assistance received, because it is kind of an above and beyond, and you aren't getting that extra reimbursement from payers or self-pay or whoever. I think the risk comes in, there's a few of them. One, is it truly hazard pay? There's been a number of scenarios where facilities are basically paying out a COVID bonus. And I've tried to say you can't just attach the word COVID to it to make it attributable to coronavirus. You have to, truly, it has to be a trivial. So hazard pay would be paid to individuals that are in a hazardous environment. The other area we can look to, because HHS has only provided a limited amount of information, is the Coronavirus Relief Fund, which is another component of the CARES Act. Those were the funds that were distributed to the states and then down to different other organizations. And they have specifically stated bonuses are not allowed, but hazard pay is. However, in their viewpoint, hazard pay would be specifically limited to treating people that actually have COVID, which seems very strange to me. I don't even know how you'd conceptually do that. Give someone a bonus on the back end because they, treated someone. So along those lines, the risk that has been brought up that we've heard from, especially on the litigation side, that I think everyone needs to be aware of around hazard pay, is that if you're paying hazard pay, you're kind of acknowledging that you're putting your employees in a hazardous condition. And so that creates a potential for litigation. Now, I get it, because we're talking about healthcare. And so the job of many of us and our employees at hospitals, at clinics, wherever it may be, the position that they're in inherently is hazardous. They're at the front lines, being nurses, being physicians, being registration. So you can kind of balance some of that risk by understanding that, but I do think it's important to have that out there, because that risk has been raised. So to answer it much more briefly than I just did, I do think hazard pay is clearly allowable. It's listed as an item, as a specific fringe benefit. And so if you're specifically identifying it, the thing that I would be aware of and be careful of is understanding that it doesn't mean a full wide bonus to everybody. So if you're paying hazard pay to your biller, for example, that can work from home, or is even in an offsite facility, I would understand how and document how that's a hazard. And it could be, if you're in an offsite facility and you have to be in person and you really don't have the ability to, social distance everyone, or even if you do, there are potential hazards there. But that, like everything else, that seems to be the risk, is how can you attribute your cost to coronavirus, and how can you avoid, the risk that somebody can claim later on it really wasn't, because it might, in this case, just be a broad bonus for employees in general. Nicole?
Yeah, thank you. I'm sorry, we came up with another question. If regardless of the amount of the HHS funds received, if a facility shows a net operating gain of anything over $1, will these funds need to be paid back? That doesn't make any sense.
Well, it does, and that's this concept of that it was previously out there, that expenses and revenues were tied to each other. That you could identify all the expenses you wanted, but if you didn't have lost revenues or you had some kind of gain, then you were not going to be able to claim anything. And on November 2nd, they clearly separated those two. So lost
Okay.
revenues is one component, expenses is the other. If you truly incurred expenses and they weren't paid for by another source, you can still have net income and claim those expenditures.
Okay, and then conversely, if a loss of $200,000 is there, then only the $200,000 would be able to be used toward the HHS funds.
And it would be same scenario. I don't think those two play into each other.
Okay.
So it's really, you have to do an assessment of expenditures. So you might have $300,000 of expenditures. You might only have 100,000. And your loss might be attributable to just poor management of other expenses. And so that might not be claimed because you can't attribute that to coronavirus. But you can easily claim much more than your losses.
Okay, perfect. Thank you. I had somebody else in the hospital breakout session and I was bragging to her that I got a one-on-one with you. And so she's like, ask this question. So thank you for your time. I appreciate that.
Yep, and I'm guessing we're right near the end. Until it kicks us off, I'll keep answering questions. But again, we'll get a printout of all the questions and try to see what we can do to get responses back.
Hey, Tyler, if I could just finish saying something that I think applies to everybody that we got kicked out. When we're talking COVID costs, don't forget, we may actually be at the beginning of COVID costs. Like we haven't even started immunizations yet, right? And a lot of these clinics and hospitals are going to be in the middle of that. Tyler mentioned to me he had a couple of clinics who bought the super deep freezes. If it's the Pfizer immunization, we might need that. This COVID cost is an evolving thing, and I think too many of us kind of think we sort of have it figured out, and I'm not sure we're even close.
So I think your recommendation basically is don't be fully concerned that you can't yet utilize all the funds and just throw them all back right now. Right now, the only penalty as we see it is the interest that might have to get paid back, at least once we hopefully resolve the taxability issue. And I think the potential gain is twofold. One, you will still probably incur additional expenses or need to shut down electives. I know I have clients that have shut down electives, and you may also, there may be continued changes in the guidance that opens up doors that we don't have right now, right?
Yeah, I think to send it all back before year end could easily be viewed very short-sighted a few months from now. We tend to think we've been through a COVID cycle. I don't know. Yeah. In Utah, the hospitals is recommending stopping electives. It's not government mandated yet, but we could buckle up. We could be going through this again. So I think we need to be cautious. This cost is ballooning, is the impression I'm getting more and more.
All right. Well, I appreciate everybody's involvement. Definitely Ashley, Eric, and Jeff being able to help address some of these issues. As things continue to change, we'll try to continue to have sessions like this or put out more information to be able to help and kind of fight our way through it to the extent that we can. And once again, I know there are a lot of questions in the chat. We'll try to get those pulled to the extent that we can and see what we can do on following up. Apologize for any technical issues, as was mentioned, but we definitely appreciate everybody being involved, and we hope that this provided everybody with some valuable feedback and some useful information to kind of hopefully at least start moving your way forward.